and happy New Year. Good morning to all, and I wish you a very happy New Year to you all. So we'll start with the income tax case law now. Case is relating to that an assessee has filed an income tax return, and in that he has sold some shares is been sold by him, and he shown that it is a long-term capital gains, and he has paid the tax. What happened is, I'm telling you only the crux of this case. What happened is, after that, the assessing officer made some verifications and to find that these shares have been sold, it is only a bogus. It is not correct. And they have made an investigation through investigation wing and find it out that this is some price manipulation or price rigging activities is involved. Therefore, whatever he has claimed as long-term capital gain and whatever money he has received for the shares sold is treated as an unexplained income. Okay, let us see what the case is now. It is a case where the order was passed by the Delhi Income Tax Appellate Tribunal. This is Aditya Saraf, HUF versus Income Tax Officer. Observation is ITAT upholds addition on account of manipulation and rigging of shares via penny stock company. The assessee or appellant is a resident HUF. For the assessment year, HUF for the assessment year under the dispute, the assessee filed his income tax return of income for assessment year 2015-16, that is 13-14, I think, 14-15. Declaring income. The assessee's income tax return was chosen for examination to determine the genuineness of the long-term capital gain offered and claimed exempt under Section 1088 of Income Tax Act. The assessing officer noticed that the assessee stated to have sold 6,000 equity shares of Mrs. Extreme Bioorganic Food Processing Limited. It is a listed company. It is not actively traded. Its shares are not actively traded. No, it is thinly traded or not actively traded. No shares is traded that much. Quantity is not there. For a consideration of 29,18,507, on further verification, we found that assessee has purchased the shares earlier at a nominal price of 25 per share for a total consideration of only 1,50,000 rupees. Whereas the time of sale of the shares, the price has increased astronomically by almost 1945%. He purchased at 1,50,000. He sold at 29,18,000. How much difference you see? That too in penny stock company, which is not actively traded. Now, doubt will definitely come. How did he receive this much amount? Either he might have had some amount with him and he knows that the shares are not actively traded. Okay, the shares are rupees, just 1 rupees or 2 rupees. So calculating that he might think that 1,50,000 multiplied by 2 rupees, it is only 3 lakhs. Whereas I am having certain income amount with me, which I have never explained to income tax. So he might have given to some other person to purchase his own shares. You understand? So that person will give his own money to him. He'll transfer the shares. So what amount? Only 3 lakhs. What amount comes in? It is 26 lakhs. It is not explained. It is now treated as white. You understand? So this is what the doubt which is arise to the income tax department. Assessing officer found that as per investigation conducted by the investigation wing of the department, at various places it was found that the company is a penny stock company. Thus, based on the information available on record, he called upon the assessee to explain why the long-term capital gain offered should not be treated as an unexplained cash credit. Though the assessee offered some explanation to the claim that shares transaction was genuine, the assessing officer was unconvinced. The assessing officer proceeded to complete assess cash credit. The assessing officer added back an amount of rupees 30,689 as commission paid to the availed bogus long-term capital gain. The additions made by the assessing officer were also confirmed by the Income Tax Commissioner's Appeal, CAT. The Income Tax Appellate Tribunal, against this order, this assessee has filed an appeal before the Income Tax Appellate Tribunal. The Income Tax Appellate Tribunal held that the assessee had not furnished a strong evidence before the department to rebut the adverse materials brought on record by the department. Therefore, the Delhi Bench of Income Tax Appellate Tribunal has upheld the addition on the grounds that there was an astronomical increase in the price of shares due to price manipulation and rigging. Accordingly, his appeal is dismissed. Okay, so he involved in price rigging activities. The shares are not traded, so he himself started selling for arranging some person to buy his shares. He given his own money to him, and he artificially increased the share price, which is 1 rupees or 2 rupees. It is was traded more than 488, 486 rupees per share. You understand? This is the price rigging and manipulation activities is involved. Finally, department held that no, it is not correct, and he is liable to pay the income tax. Okay, so this is the case. Any doubt, you can ask me now.
No, sir, it is clear.
No, sir.
Anyone taking any other sessions today? No.
No, sir, I think we shall continue from tomorrow.
Okay.
Okay, sir.
So tomorrow you can do it.
Okay, sir.
Yes, ma'am.
Thank you. Thank you.
Thank you, sir.
Thank you, sir.
Thank you to all. Thank you. Thank you.